Monday's sharp drop in the markets leads to the question of whether it's a bear market or a pullback. And in this video, I'm going to look at the advanced decline line to sort that out. Now, the advanced decline line is a simple indicator of the trend. It tells us whether the majority of stocks are moving up and down. And when we see a bull market, the majority of stocks are moving up. In a bear market, the majority are moving down. Now, there's times when we could see a divergence between the advanced decline line and the market averages. This tends to occur at the end of a bull market. And what happens is the advanced decline line starts to fall before the prices fall. This is a divergence that's been seen at important market tops. In this chart, we see the advanced decline line and the S&P 500 back in 1972. This is a time when large fund managers were buying what was called then the Nifty 50. They were 50 stocks like McDonald's, Xerox, Avon, that were big companies at the time with business models that were changing the world. They were called one-decision stocks because you simply needed to decide when to buy, since the companies were so powerful and so important, they'd never need to be sold. Well, what we see is the AD line peaked back here in July 72. Stocks rallied while the AD line failed to. And by February 1973, we had a clear signal there was a bear market. That bear market would knock about 50% off the prices of stocks over the next 2 years. In 1987, again, we see that divergence warning us that we were in trouble on the S&P 500. And it was a subtle divergence. Some traders caught up in the bullish euphoria might have missed this signal back in August 1987. However, the market did fall. The 1987 crash wiping out 20% of the market in one day. In 1999, the AD line peaked in 1998, and the index was clearly diverging by the time stocks made that all-time high in early 2000. And again in 2007. We see the stocks making new highs that summer while the AD line is diverging. In other words, this divergence has appeared at every important bull market top, but it's not showing up in the market right now. Sure, we had a sell-off, but the AD line is moving in line with the broad market. We're seeing the stocks, the average stock, participating in the advance and declines of the price average. That's, for now, indicative of a normal pullback. We're going to need to see significant changes in the internals before a bear market develops. But for now, the AD line is pointing to the fact that we're simply seeing a pullback. A deep pullback, about 10%, but a pullback nonetheless. That's all I have, and I thank you for joining me.